Welcome to this deep dive into Shell stock, the ticker symbol SHEL.
Yeah.
And you've asked for this, so we're going to break it down for you. You've given us some analyst ratings from TipRanks and background information from Shell's Wikipedia page, and a stock analysis from Zacks. We're going to use all this to explore some key areas, like Shell's financial performance,
Yeah.
their position in the market,
Mm.
recent acquisitions, and those all-important ESG factors.
All right, well, let's kick things off with a little bit of history. Shell, officially known as Shell Plike, has, well, a pretty long and complex history. They were formed in 1907 through a merger of the Royal Dutch Petroleum Company and the Shell Transport and Trading Company.
Wow, that sounds like a pretty big deal. I'm looking at the Wikipedia source now.
hmm
And it says that Shell quickly became a major competitor to Standard Oil, which was the dominant force in the energy market at the time.
Absolutely. That rivalry with Standard Oil, it really shaped the global energy landscape, especially in the early 20th century. Shell's early entry into areas like chemicals and liquefied natural gas transportation, along with, their strategic acquisitions, helped them become a global powerhouse.
Speaking of acquisitions, Shell acquired the BG Group back in 2016. The Wikipedia source says this move made Shell the world's second largest non-state oil company. They've also made a number of other acquisitions over the years, including East Resources and Billiton.
Yeah, and those acquisitions have played a significant role in Shell's growth and diversification. The BG Group deal in particular expanded their liquefied natural gas operations and gave them access to new reserves in countries like Australia and Brazil.
Shell also seems to have a strong presence in the consumer market. I mean, I'm familiar with brands like Jiffy Lube, Pennzoil, and Quaker State, but I didn't realize they were all part of Shell.
That's a great observation. Those service businesses are a key part of Shell's diversification strategy. They provide a more stable source of revenue that's less affected by fluctuations in oil and gas prices.
All right, so let's shift gears and dive into Shell's financial performance. According to the Wikipedia source, Shell's revenue for 2023 was a massive 316.6 billion US dollars. Their operating income was 37.3 billion, and their net income was 19.6 billion.
Yeah,
Those are some serious numbers.
those figures really highlight Shell's size and financial strength. They're one of the largest publicly traded energy companies in the world, and their profitability reflects their ability to operate efficiently on a global scale.
And what about their future prospects? The TipRanks analysts predict that Shell's earnings per share for the next quarter could hit $1.72. They also forecast sales of $67.98 billion. It looks like they have a history of exceeding earnings estimates, which is a positive sign.
Yeah, those predictions suggest that analysts are optimistic about Shell's continued growth. However, it's important to remember that the energy market is inherently volatile. Factors like global oil prices, geopolitical events, and even government regulations can have a significant impact on their performance.
The TipRanks source also mentions an average 12-month price target for Shell stock of $81.25. With the current price sitting around $64, that implies a potential upside of over 25%.
That's a significant potential return, but it's crucial to consider the range of price forecasts. The most optimistic analysts see the stock reaching $88, while the more cautious ones predict a low of $75. This range reflects the uncertainty inherent in any stock prediction.
Okay, so we've talked about Shell's history, their acquisitions, and their financial performance. Now let's delve into their innovation pipeline. The Zacks analysis mentions Shell's floating liquefied natural gas facility, or FLNG for their Prelude field. It's described as the world's longest floating structure.
The FLNG technology is a game changer for the industry. It allows Shell to access natural gas reserves in remote and challenging locations, which expands their production capabilities. This kind of innovation is crucial for a company like Shell, as they look for new ways to extract and produce energy.
So it seems like Shell is pushing the boundaries in terms of technology. But what about their environmental and social impact? The Wikipedia source mentions that Shell was ranked as the 9th largest corporate producer of greenhouse gas emissions from 1988 to 2015.
Right, that's a significant statistic, and it highlights the challenges that Shell faces in a world that's increasingly focused on climate change. Their reliance on fossil fuels has made them a target for criticism from environmental groups and activists. They've also been involved in a number of controversies, particularly in Nigeria and the Arctic.
The Wikipedia article also mentions a 2021 Dutch court ruling that found Shell responsible for oil leaks in Nigeria. This raises some serious concerns about their environmental practices.
These ESG factors are becoming increasingly important for investors. Many individuals and institutions are looking to invest in companies that are committed to sustainability and responsible business practices. Shell's track record in this area will undoubtedly influence investor decisions.
Let's talk about Shell's dividend policy. The Wikipedia source mentions that Shell cut dividends for the first time since World War II, in April 2020. That must have been a shock to many investors.
Yeah, that dividend cut was a sign of the turbulent times facing the oil and gas industry. The COVID-19 pandemic caused a sharp decline in demand for energy, which put pressure on Shell's profits. They've since restored their dividend payments, but that decision highlights the inherent volatility of the energy market.
And what about share buybacks? Are there any recent reports or news about Shell's approach to share buybacks?
Well, share buybacks can be a way for companies to return value to shareholders and boost their earnings per share. It's a complex topic, and we'll need to look into Shell's recent actions in this area. To understand their current strategy,
It sounds like we've covered a lot of ground, from Shell's history and acquisitions to their financial performance, innovation pipeline, and ESG factors. We've also touched on their dividend policy and share buybacks. Now, let's take a closer look at their broader economic impact.
Shell's operations have a ripple effect across the globe. They're a major employer. They contribute significantly to global GDP, and they play a crucial role in energy security. However, as the world transitions toward renewable energy sources, those economic impacts are bound to change.
So we've explored Shell's past, their present, and the challenges they face in the future. Now let's shift our focus to the question that's top of mind for many listeners. Is Shell a good fit for your portfolio? To help you answer that, let's summarize the pros and cons of owning Shell stock.
That's a great way to frame our discussion. Let's start with the positive side. What are some of the key advantages of investing in Shell? Well, Shell's size and global reach are definitely major strengths for investors to consider. They're a well-established company with a long history of operations and a strong brand presence around the world. This gives them a certain level of stability and resilience.
And their track record of profitability is pretty impressive, isn't it? We saw earlier that they generated substantial profits in 2023.
Exactly. Shell has consistently generated profits, even when faced with challenging market conditions. This track record can give investors confidence in their ability to navigate economic uncertainties. But it's worth noting that past performance isn't always a guarantee of future results, especially in a volatile sector like energy.
We also discussed Shell's commitment to innovation, particularly with their FLNG technology. Are there other areas where they're pushing the boundaries?
Shell is actively investing in a range of technologies beyond FLNG, including carbon capture and storage, biofuels, and hydrogen. These are all areas with significant potential in the transition to a lower carbon energy future. These investments demonstrate their commitment to adapting to a changing energy landscape.
That makes sense. And their dividend history, while not without a recent blip, still seems to be a point of attraction for income-seeking investors.
Yes, even though they cut dividends in 2020, Shell has since increased its dividend payments. Their current dividend policy reflects their commitment to returning value to shareholders. But it's important for potential investors to weigh this against the risks associated with investing in fossil fuel companies.
Okay, we've looked at some of the potential advantages of owning Shell stock, but every investment comes with its own set of risks. What are some of the potential downsides or concerns that investors should be aware of?
One of the biggest concerns, and this is inherent to the industry, is Shell's exposure to the volatility of oil and gas prices. The energy market is unpredictable, and Shell's profits are directly tied to these price fluctuations. So investors need to be prepared for potential ups and downs in the stock price.
We also talked about their environmental and social impact earlier, and it's clear that those concerns are still very relevant.
Absolutely. Shell is under constant scrutiny from stakeholders for its environmental and social practices. They face potential legal challenges and reputational risks related to their impact on the environment and communities where they operate. For investors who prioritize ESG factors, these concerns are significant.
And then there's the global shift towards renewable energy. That's a major transition, and it's unclear how it will impact companies like Shell in the long run.
The energy transition is a huge challenge for all oil and gas companies. While Shell is investing in renewables, it remains to be seen how successfully they can pivot away from their core business of fossil fuels as demand shifts. This uncertainty makes it difficult to predict their long-term prospects.
So, taking everything into account, is Shell stock a good fit for a typical investor's portfolio?
There's no simple answer to that question. The decision of whether or not to invest in Shell depends entirely on your individual circumstances, risk tolerance, and investment goals. It's not a decision to be taken lightly.
What are some of the key things listeners should consider when making this decision? What questions should they be asking themselves?
First and foremost, you need to assess your own risk tolerance. Can you handle the potential volatility of the energy market? Are you comfortable with the risks associated with investing in a company that's heavily reliant on fossil fuels?
And aligning investments with personal values is becoming increasingly important for many investors.
That's right. If environmental and social issues are priorities for you, you need to carefully evaluate Shell's track record and their future commitments in these areas. Their actions, not just their words, will be the deciding factor for many investors.
So it sounds like thorough research is absolutely essential before making any decisions about investing in Shell.
Thorough research is non-negotiable. Explore Shell's own website, read their financial reports, examine their sustainability initiatives, and compare their performance to their competitors. There's a wealth of information available to help you form your own informed opinion.
And remember, this deep dive is just a starting point. It's meant to give you a foundation of knowledge about Shell, but it's not a substitute for your own due diligence.
That's exactly right. Take the time to understand the company, their industry, and the risks and opportunities they face. This deep dive is just one piece of the puzzle. The rest is up to you.
This has been an insightful look into Shell, a company that's deeply intertwined with the global economy and the future of energy.
We've seen that Shell is a complex company with a rich history, facing a challenging present and an uncertain future. But they also have a track record of adaptability and innovation, which will be crucial as they navigate the energy transition.
We've explored their strengths, their weaknesses, their opportunities, and the threats they face. And hopefully this has given you a clearer picture of what Shell is all about.
Ultimately, the decision of whether or not to invest in Shell is a personal one. It's about understanding your own investment goals, your risk tolerance, and your values, and determining whether Shell aligns with those factors.
Now, as we wrap up this part of our deep dive into Shell, we want to leave you with some final thoughts and encourage you to continue exploring the world of investing. We've examined Shell from multiple angles, but I think it's important to step back and look at the bigger picture. We touched on it earlier. What exactly is Shell's overall impact on the global economy?
Well, Shell's operations are deeply intertwined with economies around the world. As we mentioned, they're a major employer, providing jobs directly and indirectly through their extensive supply chain and partnerships. This has a significant impact on communities and economies, especially in regions where they have major operations.
So their impact extends beyond just their own balance sheet. It sounds like they contribute to the economic well-being of entire countries.
That's right. Their activities contribute to global GDP and influence economic growth in multiple ways. They also play a crucial role in energy security, supplying essential resources that power industries and homes worldwide. This role is especially important in the current geopolitical landscape.
But we're also living in a time of unprecedented change in the energy sector. How do you see Shell's economic impact evolving as the world transitions towards cleaner energy sources?
That's the million-dollar question. As the energy landscape shifts, so too will Shell's economic impact. Their ability to adapt and transition their business model will be critical in determining their future role in the global economy.
So their investments in renewable energy sources and their efforts to reduce their carbon footprint will be key factors in how this all plays out.
Absolutely. Those investments will not only impact their own bottom line, but also the economies of the countries where they operate. It's a complex interplay of factors, and the stakes are high for everyone involved.
Well, we've reached the end of our deep dive into Shell. It's been a fascinating journey through the company's history, its present challenges, and its uncertain future.
Yeah, we've explored their financial performance, their market position, their innovation pipeline, and their environmental and social impact. We've also discussed the potential risks and rewards of investing in Shell, highlighting the importance of careful research and due diligence.
We want to thank you, our listener, for joining us on this deep dive. We hope you've gained valuable insights into Shell and the complexities of the energy sector.
Remember, the world of finance is constantly evolving. We encourage you to stay informed, continue your own research, and make investment decisions that align with your personal goals and values.
And if you're eager to explore more companies and dive deeper into the world of investing, we invite you to subscribe to our YouTube channel. We're constantly adding new deep dives on companies that are shaping the future.
And be sure to leave us a comment on the YouTube channel, letting us know which stocks you'd like us to analyze in future episodes. We're always looking for new companies to explore, and we value your input. Thanks for listening.